Here's exactly how I made $3,243 in like 2 minutes. I'm gonna explain exactly what I did, how I found the stock, why I bought the stock, where I bought the stock, where I sold the stock. I'm gonna explain everything so that you can replicate this exact same strategy. This is a strategy that I've been using for years now, and it's worked incredibly well. It's the same strategy that I use in my community. It works well there as well. This is a strategy that you can use daily to make money from the stock market. And you can have a day exactly like this. So let's get straight into it. So the first question that you might ask is, all right, this is cool, but which stock should I buy? What stock did you buy? Which stock should I buy every single day? There's like 10,000 of them. Should I buy Apple or Nvidia? What do I buy? The stock you want to buy should be a gapper. Now, the next question you'll have is like, what even is a gapper? The picture that I've kindly provided over here explains what a gapper is. So this is a daily chart. You should know what this is. So basically you can see all of the stock prices on every given day, right? It's going up, down, blah, blah, blah. Then one day, the price closes at this random level. And the next day, it opens at this level over here. This is what we call a gapper. It comes from the word gap, because you can see there's a massive gap in the stock price over here. That's why it's called a gapper. So this is what we want to trade. Stocks like this, stocks that gap up. Now you might ask, okay, why does a stock make this big gap? Why doesn't it open over here? Why doesn't it gradually come up over here? Why is it, why is there a big gap? The reason there's a big gap in the stock price is because something happened. Most of the time it's catalyst, meaning maybe the company announced some really fortunate news, or maybe unfortunate news, or whatever happened, right? The company will announce news, everybody will react to the news, and then the stock will go up or down. So for instance, let's say your company decided to publish news saying that you just found the cure to cancer. The second you post that, your stock price will begin going up. And that's exactly what happens over here. Now, because daily charts only show like normal market hours, they don't show pre-market and post-market, this is why there's a gap. If you were to see like a 5-minute chart, you would literally see the stock climbing up slowly up over here. But again, we're seeing daily charts, normal market hours. This is why we see it. That's what a gapper is. We need to trade these for a couple of reasons. The first reason we trade this is because they're extremely volatile. Everybody is looking at the same set of gappers every single day. There's no difference. And because everybody's seeing the same stocks, there'll be a lot of volume in those stocks. Because there's a lot of volume in those stocks, there's gonna be a lot of volatility. And when there's volatility, there's profits. That's the main reason we trade gappers. I don't trade any other stock. I don't trade Apple, Nvidia, none of that stuff. I have those in my long-term portfolio, but I don't touch them. I never trade them. I only day trade these gappers. So let's get into it. Now the first thing we need to just clarify is how to read a candlestick. This is very basic, but you should know this. Over here we have a red candle, and over here we have a green candle. Red candle means that the price went down, green candle means that the price went up. Common sense. Now, the price on a red candle opened over here, it did its thing, went up, down, blah, 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 sideways, whatever, and then it closed over here. So in this candle, all the price did was go from here down to here, right? Now, for a couple of seconds, for a couple of minutes, whatever, the price also was over here, and it was also over here, but eventually it closed over here. That's what it is. Same thing with the green candle. The price opens over here, does this thing, goes all the way up here, down, all the way down here, all the way up here, boom, 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 and then it closes over here. That's what a green candle is. Super simple. Now, here's the strategy. This is how I made the 3 grand in 2 minutes. It's very simple. There's 4 simple steps to this. Let's go through each one of the steps. The first step is to scan for 10 gappers. I'll tell you exactly how to scan for them, how to find the best gappers, etc. Step number 2 is to analyze and make a watch list. We're not going to trade 10 stocks in a day. We're not going to trade all the gappers. We're going to trade one of those gappers. And for that, we need to analyze all of the gappers and we need to make a watch list. So some of them you're just not going to trade, but some of them look interesting. So you're going to make a watch list, maybe 2, 3, 4 stocks. Number 3 is to buy one. Again, very important. We're only going to buy one every single day. We're not going to be buying 15 stocks a day and no, one trade a day, one stock a day, simple. And number 4, we're going to sell and repeat every single day. This is the whole strategy. It's that simple. Now, one thing I want you to focus on is this thing right over here. This is our profit goal and our loss max. Pretty much what this means is we're going to be aiming for a 15% profit target. And if we go down 8%, we're going to sell. right? These are rough guidelines. This is not how I trade. I don't, instantly take profit when I hit a certain number. It varies by day. But especially if you're a beginner and you're trying this for the first time, these can help you a lot. What this does is it makes sure that every single loss you have, for example, is tiny. It's only 8%. And it ensures that when you eventually have a win, it covers your loss and it makes more. So when you lose 8% and the next trade you make 15%, you cover that loss and you make a little bit more. That's the whole strategy. You do not want a strategy where your profit goal is like 15% and your loss goal is like 20%. You're never going to make money. The reason this strategy works for me so well is because my profit goal is always like, for me personally, it's like 30, 40, 50, 60%. And my loss is like maximum like 10%. So let's assume that I make a profit. I'll be up 50%. And let's say the next day I lose 10%. I'm only up 40% now. But the next 2 days I make profit. So I'm up another 50 and I'm up another 50. You see what I mean? If your losses are massive, if they're 25%, 50%, which is what my losses used to be, your account is never going to grow. You need to limit your losses, keep them extremely tiny. 10% max. Like on a bad day, 10% should be max. But it should be kind of around 5, 6, 7, 8%, that range. And your goal and your profit, your goal should be way more than that. 15, 20, 30. Not 8% profit, 8% loss. No. Keep your wins a lot higher than your losses. That's the main thing I want you to get from this. Now, step number 1, like I said, is to find the stocks. So let's just go through it. The way you find these stocks is through something called a screener or a scanner. It's the same thing. Now, if you have the TradingView app installed or whatever, I think you can do it online as well. You can have this thing at the bottom left thing. It's called a stock screener. It's super simple. Just click on it and this big thing pops up. You want to configure this scanner or screener until you have something like this. You have the volume over here and you have the gap. You don't need this. You don't need market cap. You don't need change volatility index to the you don't need any of that stuff. You literally just need the gap percentage and the volume and obviously the name of the stock. And once you have that, you're good to go. That's literally it. If you have the name of the stock, you have how much is gapping up, you're good to go. Don't overcomplicate this. We just need to find a list of gappers. Simple. Step number 2 is to choose. So once you have this massive list of gappers, the next thing you want to do is you want to choose a couple from them. Like I said, the whole goal is to buy one stock. We don't want to buy 10 stocks, we want to buy one. So the whole goal is to analyze every single one of these gappers and figure out which one looks the best. Now in my community, I do this for you. I tell you all the stocks that I'm going to be trading that day. I give you the watch list. These are the stocks I'm going to be focusing on. So I make it easy for you. But you want to look at all the pre-market charts of every single gapper and you want to analyze them. So I've pulled up 3 examples of gappers and let's go through them and let's figure out if we should or shouldn't buy each one of them. Now the one on the left, already I can tell I will never even touch. I will never get close to this stock. I will immediately ignore it. And the main reason why is because of the volume. It has barely any volume. This is what low volume looks like. This is what high volume looks like. When you have extremely low volume, you have these wicks that literally go sideways. We don't want this. This is very low volume. This is not going to go anywhere. Instantly we skip this. Then we have this. And if you look at the stock price, you notice that it just goes sideways. So it goes up, it gaps up, but then it just goes sideways. When a stock goes sideways, 9 times out of 10, what it means is it's been bought out by another company. So another company has bought the stock for a specific price, and it's gonna stay at that specific price until it gets delisted. So this stock is not gonna go anywhere. It's gonna stay at that price forever. So you never want to trade it. What you want to find is stocks like this. You can see that this is making good, healthy moves with a lot of volume. It went up. We had a drawdown over here, and then we had a bull flag. It went up again, we had a drawdown over here, and then we had another bull flag. And then you can see that it's drawing down a little bit. This is picture perfect. This is exactly what we want to see. That's how simple it is. So looking at these 3 examples, we already know we're going to be trading this one. Simple. Step number 3 is to enter. This is the most important thing. You could argue that selection is also important like this. We have to select, that's important too, definitely. But entry is also very important because if you mess up the entry, you mess up the whole trade. There's no point of that trade. Now, this is exactly how I enter. Again, we have our goals over here. A minimum goal for profit is 15. Minimum goal, but Max loss is by 8%. Now, the reason I enter every single time is if price finds support. This is the most important thing. So you can see over here, this line that I've drawn is the line that I've drawn at potential support. So this line over here is this over here, this level over here. You can see that the price, it found some resistance at this line. At this level, whatever it is, the price found some resistance. It started going down. That's the exact place where I drew this line. And what I want to see is when the market eventually opens, does the stock price obey this line, or does it just continue going below and below and below and below? Or does it go below and then go back up? Go below, go back up. But it stays above this line. That's exactly what I want to see. And that's what I saw with this stock. And when I saw that this stock didn't go below this line, I immediately bought. And I bought at this price level over here. That's how simple it is. Price found support, that's it. Again, my loss is set at 8%, 9%, something like that. I've set my stop loss. And my goal, again, is roughly 15%. Roughly. That's it. That's how simple it is. We move on to step 4. Step 4 is to take profit. You can see that the stock ended up going all the way up to here. And this line over here is the pre-market high. The pre-market high is simply this price over here. You can see that the highest position that the price went to in the pre-market was this over here. And that's where I've drawn the line. And that's exactly where I sold my stock. That's how simple it is. That's how simple it is. And from this one trade, I made 18%. That's it. Now, if you made 2 of these trades, of these 18% trades, which by the way is a very small trade, usually it's like 30, 40, 50, 60%. If you made 2 of these a week and you started with $2,000, here's how your account would look in a month. By the end of the first week, you'd have 2.7K. End of the second week, you'd have 3.8K. Then you'd have 5.3, and finally a month later, you would have 7.5. So you turn the $2,000 into $7,500. That's just by 2 of these a week. That's how crazy the strategy is and how easy it can be. And lastly, obviously don't forget, you need to analyze every single trade. Every single trade you make, whether it's a win or a loss, look at why you entered, why you sold. Was it a win? Was it a loss? You know, maybe you had FOMO, maybe you were confused, maybe you were tired that day. Analyze everything, and that's how you get better. And this is the exact same method that I use in my community. So if you guys are still not in there, you guys should really come in here because you guys can see that we get some fucking crazy wins. This guy made 1,198. This guy made 628. This guy made 300. This guy made $23. People are making a shit ton of money inside. When you join, you get access to my watch list. So I literally tell you guys. I can't do anything more than this. I literally tell you the stocks I'm going to be trading. Hey guys, these are the stocks I'm going to be trading. I literally tell you. Like, I can't do anything more for you. This is the most I can give you. You also get access to my trade reviews. So every single time I make a trade, you can see all of my trades over here. Every time I make a trade, I literally make a video going through step by step why I entered the trade, what I could have done better, how much money I made, blah, blah, blah. I literally tell you guys everything, all the trades that I make. And as a bonus, when you enter, you also get a free beginner's course, and you also get direct access to me on the DMs. So email me at thedrakerroom@gmail.com right now to join the community, because I'm closing the group soon to just focus on the members inside. So if you guys want to get in before the group closes, make sure to email me at the email. Now don't forget, if you guys want to watch a video where I explain the thing that I always do before entering every single trade, click the video that just popped up. It goes through the one thing that I always do, which is support, why I focus on it, how to look out for support, why it's so important, etc. Everything I go over in that video. Again, if you want to join the community, the email for it is right over here. Email me right now. Like and subscribe. Thank you guys for watching. I love this. See you guys in the next video. Goodbye.